6/9/2020, I got a $1,450 call chart that was down here yesterday at the lows. Today it can be traded at $14. It ran to the high of $17. This is the call chart. 1450 call up and out of the money at the time. $14 on today's low. Yesterday was even cheaper at 11. And when they get inflated, they come down. They got inflated here. Now we are inflated. Knowing when to sell the calls is what we're doing. Now that we have the call chart out of the way, let's go ahead and take a look at the opening bell that we did this morning. And Google also has an upgrade. Amazon had an upgrade yesterday, and Amazon went up 100 points today. We went straight up on the 3 minute. How to do that breakout intraday. That's what this is about now. Identifying today and identifying June 9th on the lows down here at 1442, 1450 calls up and out of the money. $14 a contract, they went up to $27. We make an all-time breakout high right here, intraday morning to 1467. At that moment, the switchback comes in, and that would have been the 1470 put. So knowing when to sell out, as I sold the call chart in the video, which I showed, if you didn't sell up there, the contracts are $7 lower now. So when we put in that high, we had what we call an 8 reversal. What does that mean? 8 times $1.53. Teeny is short for 1/16, $1.53. And mathematically, it will be right to the penny. And that was the high reversal. And there are the diamonds and the algorithms going down. And you can see how the diamonds, the algorithms, went down and then the algorithms turned. And here we are right now. And knowing when to buy the breakout and knowing when the top would be in. And then you did have an 18 reversal pullback off of the high times $1.53 mathematically. And mathematically, there is the 1, 2, 3, 4, there's the 5, there's the 6, 7, 8, right here, 18 mathematically from that top to right there. And it's mathematically 100% calculated before the market's even open. The number's here, $1.53. Now, how to spot the breakout with the 3 minute. Now let's take a look at the 15 minute. There's a 15 minute in our platform. So we can clearly see the value is $3.07 per 1/8 delta. So if I go ahead and I take the 15 minute top reversal, there's the algorithm, he changes. If you're not taking profits at the highs, then this happens and you lose the values going down on the call chart. I'll show you the call chart once again. It's a 1450 call chart, breakout trade. Here is the 1450 call, $27, and right now it's at $20 and going lower. So if you don't sell out at the highs with an option breakout, then you lose the value. Yes, we have pulled back, and it was 18 times $1.53. So here we are right now, and this is the setup. This is the Google. It's a 1250 call breakout, $14 a contract. Today on the low, yesterday those contracts, knowing when they're going to break out higher, knowing when to unload your options when you have the mathematical algorithm reversals here. If you don't sell out at the highs on the calls, then you lose the values, and you always want to be out when it's up here. That's the 15 minute. It's very strong. It's very strong, 67 IR, and it's still strong. This is the bottom pullback, and we're going to go higher now. And so we have choices to make. Since the calls have come down, they're tradable again. So we're going to go ahead and I'm going to give some limit orders out, and I'm going to set some alerts. I'm going to put limit orders out to buy at $18.50. Remember, the low was 14, the high was 27. So if I'm buying there, I'm buying wholesale. And this is set to break out higher in our market maker app here, which will make the calls go higher. Once again, option trading, alert, breakout, join the live trading room, market makers on hold, ready for you. Here we are with the break up higher on Google 3-minute, identifying the top, knowing when to sell, playing the breakout and the exit.